what if there was a way that you guys could determine the strength of the trend, right? Have you guys ever been going long out of a demand zone just to have sellers push price down below and stop you out of your trade, right? Or the same thing in resistance. Have you ever been watching price approach an area of resistance where you're going to expect sellers to defend it, and then you go short, and then buyers just push price right through, stopping you out of your trade, right? So today in this lesson, I want to break down a very simple yet effective way to identify the strength of the trend, right? So back in the day, right, I would always assume sellers were going to defend supply, buyers were going to defend demand. And the result of that was just constantly getting stopped out of my trades because I was always trying to capture the reversal, right? So I'm not saying reversals don't work. I'm just saying I found way more consistency when trading with the trend of the market. So today I want to break down the trade we took live on Discord yesterday, 6/7/2024, right? It's a perfect example of this, right? So before we go any further, guys, if you want to get involved with the High Performance Trader Army, access to the Discord comes in two ways. You can pay on a continuity plan, which is monthly, or you could purchase Trader Bootcamp or Market Philosophy and get access to the team for life, right? These two resources are highly effective, and not only if you buy one, you get the other one for free, right? Both the online courses are completely uploaded over here on the Discord, right? If you come over to the Discord, you're going to see I've uploaded all the resources that High Performance Trader creates, right? Over here, you're going to see all 18 different mini courses over here, Trader Bootcamp, and then Market Philosophy, right, where we break down price and volume analysis, real more fundamental course for beginners, right, to get familiar with supply and demand, price and volume analysis, process development, trading metrics, market psychology. Trader Bootcamp being more of I understand how the market works, now I'm ready to make some money. Now I'm ready to develop a process, right? So I give you all the tools you need to really understand the market auction, the areas of value, the market conditions, trading with the banks, all the principles and precepts that I use to get in and out of the market successfully, right? So make sure you take advantage of those resources, right? So once again, the day we're talking about is 6/7/2024, right? Now, every single day, the way I approach the market is I identify my areas of interest, right? These are your previous day low, end of day, previous day high, obviously open print, right? These levels are very important because it's where all the banks are. It's where all the liquidity is, right? And it provides a template, right, for us to be able to watch large money take control of the market, right? We can't move the money, we can't move the market. The banks do, right? So we must learn to identify who's in control, whether it be buyers or sellers, and then put on trades with low risk, right? So first thing we do, identify previous day low, right? So previous day low is right there. Then we have end of day, right? End of day is the ending price of the day previous, right? Oh, bear with me. I'm not used to TradingView, but Thinkorswim is currently down, right? So we have previous day low, we have end of day, and now we have previous day high, right? And now these critical levels are not only a great way to determine market conditions, but it's a very simple way for you to identify entries and exits. Meaning, if I long previous day low, I'm targeting end of day. If I long end of day, I'm targeting previous day high. See, the space in between these levels is what I call market imbalance. And these are the areas I look to obtain every single day, right? I'm looking to take my trade from end of day to previous day high, right? Like in this example. I'm looking to take my trade from end of day to previous day low, right? And then whatever happens, I then adjust my stops and take profit, right? So first thing I want to show you here is price sells off, falls below previous day low. Okay, look at how buyers come up and look how they react to previous day low, right? So there's two things that could have happened here at previous day low. Price could have came down below it. We got a classic break and retest and then sold off to then our next level of interest, which maybe would have been this level or previous day low, right? That's scenario one. Scenario two is buyers show strength and obtain the level, right? So this is a check for buyers. This is 1 point for buyers. This is telling me that buyers are stepping up. We've gotten this gap down, right? Now buyers are really initiating strength here by taking the critical level. See how we use the price action at the critical level to determine the conditions of the market, right? That's very important. But I'm not quite ready to take the market long. Next, notice here how we start to rally up into this end of day area, right? So this is what we could call a supply zone. We could call this an area of resistance, right? And basically all that means is there's a bunch of sellers up at end of day that are getting their positions filled. And now based on how strong buyers show up, price is either going to blow right through it or price is going to reverse, right? So there's my two scenarios once again, right? So when I'm determining to put on a trade, I'm going to run through these two scenarios in my mind. And I'm going to go, okay, either sellers are going to control end of day or buyers are going to control end of day. What do I need to see to trade with buyers? What do I need to see to trade with sellers? This is where the moving averages come in, right? Because how the candles react to the retest of the moving averages is going to provide you a phenomenal edge. It's going to give you the understanding you need to put on the trade either long or short. Or, even better, sometimes I don't like the way it looks, I'm staying away from the trade, right? And that's one of the most effective things that the moving averages do for me is they keep me away from bad or low quality or low probability setups, right? So learn to develop the relationship, the understanding of how price reacts to the moving averages. Once again, you're always going to have a massive edge, right? So look here how price rallies up above the 9, above the 20, right? So the green line is the 9 EMA, and the pink line, or the purple line, is the 20 EMA, right? So price rallies above these moving averages and comes down, and look how buyers continue to hold it. They hold it here. They hold it here. They hold it here. We get a nice move right up into end of day. This is where we buyers get met with those sellers we were talking about, just continuing to eat up those selling orders, right? Now, what I'm looking for here is for price to stay above those moving averages, right? But not just stay above them. I don't want to be extended. I don't want a gap. I want to see them tag the moving average, and then I want to see the candle close bullish, right? So we called this trade out in the Discord. As soon as this candle closed bullish, I was in this trade long, targeting my market imbalance to the upside at previous day high, right? So notice here, I'm using the critical level as an entry, right? Or a template or a canvas to understand large money. 2, I'm now using the moving averages to determine the strength of the direction of the market. So if I'm looking to go long, I must see the moving averages be respected. I must see buyers continuously defend that moving average. If sellers are pushing price below the moving average, I'm staying away from longs, and then I'm going to be more open to what a short play will look like, right? And then 3, I have my clear target over here of previous day high, right? I'm looking to capture the space between, right? Let me get this, where is it? Right here. I'm looking to capture the space between critical level to critical level. This is what we call our market imbalance, right? And why I do this is because, once again, bring it back to large money, bring it back to liquidity, right? If there's high amounts of liquidity up here at previous day high, that means if these sellers right here have end of day, right, that passive seller we were talking about, if all his market orders are filled, right, it only makes sense that price is going to rally to the next high volume, highly liquid area, which in this case is previous day high, right? So looking to capture that space from end of day to previous day high. And I'm looking to trade with buyers because the way that they are respecting the moving averages, right? So we took the market long. Once this candle closed bullish into end of day, and we got this beautiful pop right up to previous day high and above. Right? Now, when it comes to profit taking, there's a couple different ways to do this, right? I like to see price. I want to give it a little space to breathe, right? I was trading SPX, so you have to be very quick with these contracts, but you don't want to sell too quick, right? Now, there's a couple different ways to do this. On the 5-minute, you're going to see we get this massive push off the EMA, and then we get very extended from the EMA. So once we rip into target, right, and we close above previous day high, notice the space here between the ending price and the moving average. This is the area I like to be very careful when it comes to profit taking. I'm securing profits at the end of this candle. I don't care what happens after it. I've locked in my risk reward ratio that proves consistency. Trade is done, on to the next. right? So guys, I hope this lesson really brought some knowledge and some understanding to you on how to determine the strength of trend. If you guys have any questions, concerns, or comments, leave them below. Make sure you hit a like, subscribe for more content, get involved with the Discord. I'll see you guys in the next lesson.